Good morning, everybody. Hope we're doing really good today. Welcome back to the channel. Today, we're going to have a little face-off, little battle to see which one is better. If it's dividend growth or high yield. Depending on you and your circumstances and your time frame, you might want more income now, or you want higher yield now, or maybe you want a company that grows its dividend over time. Before we get into that though, if you're new to the channel, I'm Justin. I like to talk about dividend investing, income from options, financial independence, putting out videos 3 times a week. So if you get anything or learn anything or find any value in this video, give me a thumbs up. I'd really appreciate that, and subscribe to the channel if you haven't, alright? Income investors have a little bit of a conundrum on their hands. It's if they want to invest in higher yield, or if they want to invest in companies that grow their dividends over time. And we can't find a good balance in this, but we can look at the extremes to kind of get a better idea of how they affect everything. See the pros and the cons at the extremes, and then we can come together in the middle somewhere to find the right balance for us. We only have so much money to invest. We have limited capital and resources. So we need to make an informed decision about these kind of things on what kind of company that we want to invest in. So today we're going to look at 2 companies. One of them is AT&T and one of them is Home Depot. One of them has a higher yield but lower growth rate, and the other has a lower yield but a higher growth rate. And we're not going to look at stock appreciation in this. We just want to look at the dividends and how they grow over time. Here's AT&T, currently trading at $30.69. It's got a high yield of 6.61%. It's pretty popular with income investors. It's got a good payout ratio, and it's been growing its dividend for 20 years, and for the past 5 years, its compound annual growth rate is 2%, just a smidgen over 2%. But we can look at the history. We want to look at the 20-year history here to get a better idea of what's going on with the dividend. So invested in 20 years are like, well, so we'd be where we at here. So our fourth quarter 20 years ago dividend was $25.11, and 20 years later it's 52 cents. So that gives us a growth rate of about 3.5% for the past 20 years. And that's a little better for our purposes here, and not our 5-year. We want a longer time frame for what we're going to look at here. We also do have these little special dividends paid out in 2003. Not sure what those were about, but those are not really going to come into play because those are special. Those aren't things we can really count on or calculate or depend on. Next company is one that I'm a big fan of, Home Depot, and it has a lower yield, only 2.26%, still got a great payout ratio of 50%, 5-year growth rate of 23%. That's a lot. And it's been growing its dividend consecutively for 11 years. Now, this 11 years thing kind of bothers me because it's consecutively. Now, Home Depot has never cut its dividend, but it has been consistently raising its dividend, but just not for year on year. Here is their 20-year history of dividends, and you see they've never cut a dividend, but around in 2006 all the way to like 2009, they didn't raise their dividend. It was just 22.5 cents for about 3 years. But you go back all the way to fourth quarter 2020, we have consistently, it has been growing its dividend. Just there was like a big gap there around 2008 that they didn't. But you can see since then, well, we got 2009, 2010, and all that. For the past 11 years, they have grown it and increased the dividend every year. If we just start with 20 years ago, our quarterly dividend was 4 cents, and our quarterly dividend this year and this quarter is $1.50. That means this company's been growing its dividend on average 19% a year, which is pretty incredible. Now, I went and made up a little spreadsheet. If we take $10,000 and invest it into AT&T or Home Depot, not necessarily the company, but we're just calculating how the dividend reinvested would grow in the future. No stock appreciation. We're just looking at something that would be $10,000 with a yield of 6.6%, and that grows 3.5% a year for the next 30 years. And same thing with Home Depot. We just take $10,000 and a hypothetical yield of 2.3%, growing by 19% a year for the next 30 years. And these are results. And I really like these results because you really do learn something out of this. So in our first 10 years, you can see the blue line is AT&T. And it does outperform Home Depot because it has that higher yield. But you see there that the trend, it looks like it's starting to change a little bit near the end of there. And maybe Home Depot is going to catch up a little bit. Your $10,000 after your first 10 years in AT&T, your high yielding position would grow to $17,789. And in your high dividend growth position, your Home Depot kind of position, your money would grow to $15,683. So your high yield wins out in the first 10 years. But then after 15 years, it catches up around year 13 or 14. So your AT&T kind of position would grow to $22,812 after 15 years, but your Home Depot would grow to $25,239, and it starts to beat there, and your dividend growth is accelerating, and after this, it just blows your high yield out of the water. And 20 years, you can really see your AT&T position be $28,777, with your Home Depot $48,046. And now it's just, there's no catching up. You can see that AT&T cannot catch up to Home Depot. And after 30 years, it's completely clear, and there's only one winner here. There's no two ways about it. AT&T had grown to $44,277, which is respectable, but your Home Depot position would grow to $232,343, and that just blows out your high yield out of the water. That's just great. You have 30 years to go. You have 30 years to wait. A company with growing its dividend by 20%, that's the way to go. If we're primarily focused on income, we can do the same thing. Our income would actually, our Home Depot income would actually start to beat out AT&T income at about year 10. AT&T be bringing you in about $904 a year, and Home Depot would be bringing you in about $1,100 a year. And 15 years in, it'd be $1,000 for AT&T, actually $1,074, but your Home Depot position be bringing in $2,600 a year. And that's just, after that, it's just more and more every year. 20 years, AT&T would bring you $1,276, but Home Depot would bring you in $6,267 a year. And after 30 years, AT&T be bringing you in $1,800 a year, and Home Depot would be bringing you $35,693 a year in income. Now, I know it might be hard for Home Depot to continue raising its dividend for like 20% a year for the next 30 years. But the point of it is just to see how high dividend growth can outperform high yield after a bit of time, about 13 years or about 10 years. Then after, 15 or 20 years, it's really makes a really big difference. Home Depot might not be able to continue this rate of growth, and who knows, something could happen with AT&T too. Both of these could, things could change in the future where these companies have to cut their dividends, or maybe, AT&T does something great with this streaming service, and that becomes a huge hit, and they can increase their dividend much faster and outperform Home Depot. Or, and then none of this is price appreciation either, but it's just something to think about when comparing dividend yields. Dividend growth rate is really important, at least to me, and there's a study that says companies that grow their dividends outperform companies that don't increase their dividends. And you don't have to just do only growth company. You can have some high yielding and some dividend growth and, find a nice little balance in there. But that's up to you and your strategy, and your circumstances, your time frame, and all that kind of stuff. Hope you get something out of this video. Give me a thumbs up if you did. Subscribe to the channel if you haven't, because I'm putting out videos about 3 times a week. And then I'll put some other cool videos over here that we can watch. Now I want you to go have a good day, all right? Justin out.